properties have emerged as one of the most interesting net lease categories over the last decade, driven by the company's shift toward drive-through only prototype locations. When you combine BBB Plus, investment grade credit, a drive-through corner pad, and a smaller building footprint that makes the entry price more accessible than pharmacy NNN, you've got a category worth paying close attention to. Here's what every Starbucks NNN investor needs to know. Starbucks NNN properties trade at 4.75% to 5.5% cap rates for corporate guaranteed drive-through locations. Buildings are notably small, 1,500 to 2,200 square feet, but they sit on half an acre to a full acre of corner real estate in high traffic locations. Entry prices run $2 million to $5 million, which is significantly more accessible than pharmacy or QSR ground lease NNN. Lease terms are 10 to 15 years initially with multiple 5-year renewal options. Corporate credit from Starbucks Corporation is S&P B+, Moody's A2, the same tier as McDonald's Corporation. Starbucks generates $36 billion in annual revenue across 16,000 plus U.S. stores, nearly all company operated. Starbucks offers something relatively rare in NNN investing, investment grade corporate credit at an accessible entry price. A CVS or Walgreens NNN in a good market might cost you $5 to $8 million. A drive-through Starbucks on a comparable intersection might cost you $2.85 to $3.5 million with the same BBB plus credit level. The smaller building size also means a location that's valuable to other coffee operators or QSR tenants if Starbucks ever needed to exit. The real estate utility extends beyond just Starbucks. Florida's growth trajectory keeps creating new Starbucks BTS inventory, so you're not limited to fighting over existing deals. Here's a nuance that matters a lot with Starbucks. The leases are NNN, but they are not always absolute NNN. Some Starbucks leases retain landlord responsibility for roof and structural elements. This is different from an AutoZone or Dollar General absolute NNN, where you literally do nothing. Read the specific lease carefully before assuming zero landlord responsibilities. The corporate guarantee is from Starbucks Corporation, the publicly traded parent, on deals where you have true corporate NNN. Rent bumps are commonly 10% every 5 years. Lease terms of 10 to 15 years are somewhat shorter than pharmacy or dollar store deals, which means you'll be in the renewal cycle earlier. 3 important things to watch with Starbucks. First, read the lease. NN versus absolute NNN is a real distinction that affects your total cost of ownership. Second, Starbucks has faced some challenges over the last couple years, including labor union activity and softer same-store sales in certain markets. These are not existential risks for a global $36 billion revenue company, but monitor the tenant's operational trajectory, especially if you're buying a shorter-term lease where you'll be facing renewal discussions with a tenant in flux. Third, drive-through is critical. A drive-through, Starbucks is a categorically different real estate asset than an inline or mall Starbucks. Only buy drive-through NNN properties if your goal is a high-quality passive income asset. Non-drive-through Starbucks locations are far more vulnerable to changing consumer habits. Drive-through Starbucks. It's one of the more overlooked entry points in corporate NNN investing. You get investment grade credit at a more accessible price point than pharmacy. I'm Ryan Solberg with MaxLife Commercial. If you want to evaluate Starbucks NNN properties in Florida, let's talk. Visit maxlifedevelopment.com or call 321-586-2121.